Stocks are lower ahead of the closing bell as those looming Trump tariffs create some market uncertainty. For more on what's going on here, let's welcome in Brian Levitt, Invesco global market strategist. Brian, good to see you. Thanks for coming in.
Pleasure.
So the president's speaking now, not backing down from the Mexico and Canada tariffs that are scheduled to go into effect at midnight. Is it fair to say that most market participants were thinking this was a negotiating tactic, it wasn't going to actually go into effect? And now that it looks like it is, people are starting to freak out?
I think it is fair to say that. I mean, we saw a month ago a lot of setup of concern around it, and then when the administration backed off for a month, the markets were calm. I've heard it from a lot of people, similar to what you just said. This is a negotiating ploy. He'll extract some concessions out of the Mexicans and the Canadians, and then we'll be on to all the good stuff, tax cuts and deregulation of industry. So the market's trying to grapple with repricing for now the tariffs and wondering when the policy follow-through will be on the things that many people were excited about when Trump was initially elected.
And Brian, I think for investors who are listening right now, what they're trying to figure out, what is the possible impact of tariffs on earnings growth looking ahead? How, as a strategist, you try and think through that dynamic?
Yeah, things slow as a result of it. Yeah. And it either someone's got to pay for it. So either the businesses pay for it and
or we do.
And if the businesses pay for it, then certainly the cost line is going to be impacted as a result of it. So what I always tell people is that tariffs will lead to less optimal outcomes, right? Plain and simple. You can decide that it's good for security, you could decide that it's good for specific industry or community, but in the aggregate, you're going to get a less optimal outcome, and you're seeing that with regards to how the markets have been handling it in the short term, and certainly with regards to sentiment. Sentiment's been pointing in many places in the wrong direction.
Well, and if you look at some of the recent polling, it has been that people elected President Trump in part because they wanted him to focus on the economy and tackle inflation.
Right.
And I know you've been watching inflation break-evens, and tariffs don't help with this either, right?
They don't. If you've been watching the break-evens the way I have, in the short term, so 1 year, 3 year break-evens, those had moved up, meaning we're going to have some near-term inflation for obvious reasons. The good news for investors and the good news for the Federal Reserve is that the 10-year, while it's moved towards the higher end of where it typically is, it's still below 2.5%. So I view as long as you're below 2.5%, that's a Federal Reserve that's not going to be concerned that inflation expectations are becoming unmoored.
And the implication there being that any tariff effect, even if it's not a negotiating tactic or whatever, but an effect would be temporary.
That's what we saw in 2018.
Yeah.
You saw the price of tariff-impacted goods and tariff-impacted categories go up. If you wanted a washing machine in 2018 or 19, the price of that had gone up. The rest of the core basket, services, did not go up. Because we either make substitutions or we spend less on services. So I don't think it's broad-based inflation. If you remember, in 2019, the Federal Reserve actually lowered interest rates. So I think that's a better way to think of it, that this is going to impact sentiment. To your point, it's going to impact corporate profitability to an extent. I don't believe it's end-of-cycle stuff. I believe it's a less optimal outcome, and ultimately the Federal Reserve is going to have to follow through with lower interest rates.
We talked about trade uncertainty, but another big worry that we've been talking about is these kind of growth worries bubbling up. Yeah. And you got more economic data today, you got soft data on the manufacturing sector. I'm curious, are you sharing those worries, or do you believe they're overblown? How do you think through it?
Well, if you think about the balance of risk, we've debated for the last number of years as an investment community whether you should be more concerned about growth or more concerned about inflation. Once inflation peaked by the middle of 2023, I was on to growth. And I've been far more focused on growth, even with inflation at the upper end of the Fed's comfort zone. I'm okay in the upper end of the comfort zone. I'm more concerned about what this means for growth. For a long while is what do all these interest rate increases mean for growth? Most of us had fixed rate mortgages, so it didn't really matter. But now it's more, what does this type of policy uncertainty mean? And it's policy uncertainty in a variety of different areas. How's the federal workforce feeling about what DOGE is doing? How's the business community feeling about what these tariffs may do? So maybe the president can start to provide some more clarity in his upcoming comments, but that's really what tell us the rules, right? That's what the market wants to know.
And so put all this together for us. Are you getting more defensive right now as a result of all of this?
If I look at leading indicators in the United States, they're kind of going sideways or slightly lower. So that still suggests you want to be a little bit more defensive. Defensive, low vol, quality. The problem with quality is people tend to think Mag 7. You want to be a little bit more value oriented with regards to quality. Interestingly enough, you have a different story outside the United States, where you're getting surprises to the upside. Leading indicators are improving in places like China and Europe. Their central banks are helping. So that's become a better story so far this year. So it's a little mixed. Recovery trade outside the United States, hoping for some pickup within the United States, but sentiment currently pointing in the wrong direction.
All right, thanks a lot, Brian.
My pleasure.
Good
Thank
to
you.
see you in person.